Good morning, everybody. All right, so yesterday we got a big red bar, relatively big compared to what's been going on after a gap up. So it was a sell day, but it didn't violate any support yet. Things are up a little bit. They're at the bottom of the red bar so far. So no big deal. They're into resistance. You can look to the cursor on the 15-minute or the hourly. You can see them right into resistance there. So they're going to have trouble there. It's where sellers are going to be. Based on looking at the spider chart, we have to see again what today brings because, well, it didn't violate any support. It didn't take out any resistance. So today is about, do we get follow through to the red bar? Does it consolidate at the bottom of the red bar, waiting for the jobs number tomorrow, which is probably more likely what's going to happen? And then we'll see which way it goes. And we've got a consolidation at the top, got a breakout that failed. We got rejection on a retest. And still, it's just sideways because if you look at this on a closing basis, there's just a little blip up and a blip down. And we wait to see which way it's going to go. But clearly, there's been distribution up here, no doubt. But it hasn't broken down yet. So does it continue to go sideways and then push higher? We don't know. We'll just have to see. So the opposite of what we have here on the daily chart of a wider red bar with consolidating at the bottom, on the weekly chart, well, that's actually a monthly chart, but it's probably close to the same. Well, no, it's not. It's extended. Now the monthly this could come down a bit, and going into next year, really not much of a big deal. But look, what's going on here? Our bias, especially with the internals where they are that this is extended. It's at resistance. The week is not over. If it closes with a topping tail, our bias is going to be that this is going to pull back. Now, maybe it breaks down under a prior week's low. As you can see, it hasn't taken out a prior week's low since it started to advance. Momentum is slowed. And we're waiting. That's the bottom line. As prices slow down, and slow down meaning the distance between the high and the low, the range, get tighter at resistance, it becomes easier to violate support and start a pullback. Now, assuming that's going to happen, will it stop at the rising 20? I don't think so, but we'll see next week. I think somewhere down here. And from there, I'm hoping that happens. I mean, look, today's the 7th. We can get into next week where maybe this corrects a little bit. And I think that we could have a move up to test the highs, into the holiday. But, we'll see what tomorrow and next week brings. And we've got this unfilled gap down here. It is extended. Everything I said, we just haven't gotten a violation of support yet. And I don't think it's going to move out of this range one way or the other today because people are going to be waiting for that jobs report tomorrow. So there was something today. What was it? Continuing jobless claims, which they went up a titch, not a big deal, right? And markets kind of went up a little bit on, a little bit more information to suggest the Fed is done. I'm kind of sick of hearing about that, but that's the focus this year, right? SPX, the ranges are expanding a little bit from what they were, and top of the range, bottom of the range. Well, could, and where this closed, things are at the bottom of the range right now, could easily tag the top side. If it could move up there, and easily could tag the bottom. So I think the move here is to see if it moves up a little bit first thing in the morning, following through on this little bit of strength that there is, and then consider the top range from there. Because if it does move up into 930, it's possible to have 4,600 And even better, I mean, if it really advanced, 4605 would be my preference because it'd be above the whole number. Um, Expiring today, 4600 has the largest open interest. It's not huge, but it is the largest open interest. So it'll be a sticking point besides being the whole number. Looking at that open interest is useful information. And I probably won't be able to get above it. And if it does get above it, it'll probably be momentary. Just looking at the chart, it just keeps getting rejected from there from now anyway. So other markets, let's look at the Qs, which have been weaker, and a gap up and a larger bar. You see the rejection up there. It's gapping up into the middle of the range. It's up into the resistance. You can see on the hourly time frame the congestion that's up there. So just flip-flopping back and forth. Not very meaningful. Honestly, not meaningful, other than just the gyrations that typically happen for now. But this is certainly more bearish than the spiders are, because semiconductors have been under some pressure, more so, and tech generally. And you can see that deeper correction into the gap fill and this gap reversal. This is up a little bit. There was some positive news on AMD, but that doesn't look very good. But getting deeper into the AI chips, so competition for NVIDIA, which that's interesting going forward into next year. This had a big move. That's a big nasty red bar, and then you see what prices are here. It's a relatively significant gap up, and that is helping the Qs. And it's other semiconductors, which I haven't looked at all of them. Maybe they're up here a little bit, but the weekly chart rolling over there, and it'll be interesting to see if this gets sold on the gap up. That'll be telling. Interest rates. I'll get to the other markets, but interest rates are nearing that support. Actually, they're there. And they're gapping up a little bit, but coming off of the gap up. But we have to, keep an eye on this, because this has been the theme all year as far as interest rates. And when they're, going up, bad for the market, going down, better for the market. And now they've been going down and the markets are going sideways, which, hey, the market, markets made their move, too big of a move in too short a period of time. And, the positive event here of this moving down isn't helping. And part of that, in part, is, hey, you got the dollar moving up, but you got oil moving down. So there are more positives than negatives, and the markets can't get off the mat right now. Joe's asking me, what does the high open interest mean in terms of destination of the spiders? Well, the S&P's 0 DTE day is every day. And when there's a large open interest at a strike that's expiring that day, it tends to act as an area of resistance and vice versa. So it makes sense to keep an eye on that. And that goes into a deeper conversation about market makers and all of that, which for now, just look at the simplicity of a large open interest, especially at a whole number, is going to be a sticking point. And from there, it's like we spoke about yesterday in MT Live, one piece of information isn't a strategy. So you take that in combination with support resistance trends, and you begin to develop a bias, not just based on one piece of information. Right. Ross is asking me, rotation has started with IWM having a huge bar, except for Apple. Well, you're asking me a question, but stating a fact. So there has been some rotation. There's no doubt about that. But so as prices correct a bit, you see the rejection here. You can see rotation into regional banks. But look to the left, they're at resistance. You look at biotechs, which have been beaten down all year. There's been some rotation. They're into resistance. So when we look at IWM, and in part we're looking at what's driving IWM, but you had the rotation into IWM, and it's having a hard time here. It got rejected on the move up yesterday. So in a broader sense, generally, our bias is, hey, markets are correcting right now. At some point, maybe it'll be the jobs number that pushes them down tomorrow. But the move up was so positive or so powerful that unless prices were to collapse, and I think the only reason we could think that they could possibly collapse, okay, it would have to happen. Can't see it happen, would be interest rates soaring off of this support. And some news would have to come out that really would drive those interest rates higher, people to sell bonds, which have been killed, in a big way. And so at this point, was the short answer to what's going on is the markets got ahead of themselves. They need to correct a bit. They'll probably do that, and buyers will step up again when it reaches a point where it's desirable to do so. So this rotation of what's been beaten up down rally needs some type of a shakeout, maybe on a monthly time frame. Well, came to the bottom of the trading range, but some sideways price action would be great. And then that would support things moving up into next year. So that's what we'll be looking for. And so just to, kind of all these questions and the things that we look at, it's all in the courses, whether it's the MTS course or the swing trading course, the concepts of shakeouts, patterns, bar by bar analysis. When you understand that, all of these questions, if you apply that information in the systematic way it's presented, your questions will be answered. So it doesn't, in certain instances, it doesn't mean to act on anything right now, which as we look at what's happening right now is the answer becomes wait for a pullback, and there should be setups for prices to move higher, which we don't have yet. Rejections at the top, short-term credit spreads. Yeah, I know, Robert. Sitting on your hands is no fun, and that's the problem, because we sit here and we feel kind of like we're doing nothing. But if we are applying our method, and our method says we don't have any advantage right now to be trading something other than maybe what happens intraday, our job is to sit there and wait. And I know it's not easy. All right, let me continue. I'm talking a little too much here, but questions, breakout on the transports. We need to see some pattern here, like a bullish 180 would be great. If today was a big green bar that closed at the high, I'm going to tell you tomorrow we should be looking at transportation stocks. And if we see that at the end of the day, we'll scan the transports to see if there are buy setups to go higher tomorrow. But you want to risk the jobs report? We can. It depends on the stops and what we're looking at. Yeah. So look, YM rejection yesterday. We're here, not a big deal. Just doing nothing here. It's extended. Little rejection there. Wide range bars. It's just what's happening here. I wouldn't call this typical, but the stall right now is typical. Of course, gold got rejected. We'll see where that's going. Gasoline and oil are coming down to support. So watch. We'll see if this bottoms out and begins to make a turn. And you hear the jawboning about Bitcoin. Who doesn't like it? Pocahontas was on there talking this morning on CNBC. And was it Jamie Dimon was there saying they should eliminate it. I don't think this is going anywhere. So we'll see what today brings. All yours, Dan.
Good morning. Yeah, I was listening to Warren there. They were asking her about the constitutionality.
Like the others.
What?
You fancy that woman along with Maxine and what's her name? Pelosi, your favorites.
And Hillary Clinton, don't forget.
Oh, man. The queen of the ball.
Yeah. So it just turns my stomach listening to her. They were asking her, oh, what do you think about the constitutionality of this wealth tax, this and that. And she's like, well, she doesn't answer it. She's like, well, we'll just think of all the money we can have for child education, and all she wants to do is spend money. Same old playbook. Um, what did what um what did Musk pay in taxes? Like I forget what, $5 billion? And she says he does not pay his fair share. All right. So I was looking at the diamonds here. I always glance up at the Dow 30, see if anything's moving. And can you believe there's not a single stock up or down more than $1? Well, I stand corrected. There's one. Nike is down 240. That could be a day trade short and a call spread. Not a big move though, so it's just a little counter trend riding the elevator back down. Let's look at, and so I don't have a single alert going off on our opens, so that's good. Well, it'd be better if if it were gapping in our favor, but at least there's no problem children. All right, these are earnings last night and this morning. GMS, I don't see any gap. I lose pre-market. Dollar General. Remember, we were long this over here. We had a nice little swing trade. We left some money on the table. Started with this pro gap right here. Red bar ignored. Nothing to do now though. Sienna whipping all over the place pre-market, now down at 45. That looks like a call spread if it can't bounce. Today is Thursday, which means if we can get some 1 DTE credit spreads, this MEI was a potential bottoming pattern. Now it's gapping under here. So that's damaged goods. 19 and change, no pattern. Delete you. Look at this charge port, another EV stock. Look at that. I mean, these are all just poster children for you're forcing a business on the world that's not economically feasible on its own. And these things look like this despite billions and billions of subsidies. I mean, that thing looks horrible. But Chewy, gapping down right to this prior low. I have Google in the other chart, obviously. Let me put old Chewy here, see what he does. But as of right now, it's ugly. Daily, weekly, monthly. Napa 940, bearish gap. We'll come back to it. And GME, something got it going last week. Now it's getting slapped back to reality, but it's right here in the middle. We'll come back to it at 10. It's a possible condor if there's any juice, which is selling out of the money call spread, out of the money put spread. Pre-market here, the Qs and spiders are just grinding higher, and that's bullish. Boy, it's grinding through all this resistance level. Look at these 15-minute bars. Higher high, higher low, very controlled. That is steady buying. 388. Now it's over 50%. Just eyeball it there on the daily chart. That's 60% gap or a tad more. I mean, we've been patiently waiting to short and to sell call spreads, but man, I really thought yesterday was going to be the start of it. And I did say, we always talk about the market until the close in the green room. And I said, I got a full bearish bias, provided we stay under this resistance. Now we're over it on the spiders. And I said, ideally, I would like a gap up to resistance, bobble around for 30 minutes, take out a 30-minute low, then we're going to start shorting. So it's not out of the picture yet. I guess I need to wait at the open and see what's gonna happen here. But right now, that is a bullish 15-minute chart. Flex. John, what's your question? We're in this short. My alarms didn't go off. I always have up down alarms. Nicola, look at this thing, another victim of Biden's Green Deal. Just amazing. Look at that, $97.06 down to 78 cents. And they're doing a secondary offering. I mean, that I would call that a lottery ticket. For you to buy a secondary offering in this thing, when their chart looks like this, like they're on their last wire. So you're buying a lottery ticket. I surely wouldn't expect to get that money back. Maybe they turn it around and that's why it's a lottery ticket. Maybe they get bought out. It gaps up to $3. Maybe. Nobody knows. OXM opening flat, no pattern. Sportsman Warehouse gapping down 480. This was a potential bottoming pattern on the monthly. Had it open flat. That would have been an interesting long over yesterday's high if it opened flat, but the gap messed it up. 67, there's a bearish gap. Nothing to do. ABBV. Buying a company, but no damage. Breeze 58.50. You know, it's capping over a red bar, which is bullish. But things that move that much on earnings, gapping up to 61 would have been much better as a gap and crap candidate. Because then 61 less 56 is a $5 gap. Greg, glad we bailed on AI. We got out of that at a small gain. Didn't want to hold over earnings. That's getting whacked pretty good. Yeah, there was news on Google. They said Google's up because they're coming out with a fancier, more powerful AI.
Yesterday there was news they were behind everybody else, and it was weak.
Wow, AMD, that's a big gap. Wow. I'm assuming that tail's real, but nevertheless, gapping up to the open is very bullish. Base 2142 is, wow, this, my eye just always it goes to points of interest. And my eye went to two of them here. This bottoming pattern after a breakdown failure. I mean, we had a great MT live yesterday. You should watch the recording if you missed it. And just talking about, hey, the meaning of candlesticks and without fancy terms. Look at this. This was a breakdown failure. Wide range igniting, little bull flag. That was an amazing, two trades right there, but nothing to do now. SMTC 1850. Let's watch that on a pullback. I have an alarm on Cuervo Gold. Sam's Cuervo Gold had a little breakout yesterday. I have an alarm at 98.60, I think. CXM. Wowzer, that's an ugly gap. Man, look at that gap to $12. Ouch. This thing, I mean, that is so shocking that my first question is it a bio? Because usually only bios get friggin' head chopped off that bad. What is CXM? I thought it was technology or something. CXM technology software, yeah. Sprinkler Inc. Never knew the name. All right, Chewy bottom right, getting some buyers here at 17. Let's see what it does. SMTC middle chart. All right, almost done here. Vive call spread, bearish gap and a bearish downtrend. Sell setup weekly. Let me check. Oh man, look, the bid just dropped. Look at that. Friggin' that is scary. If you were long and trying to get out and then you see the bid drop like that, that's a sphincter tightening situation. Uh, 8 DTE, but the 180 calls naked right now are 60 by 180. That's a nice pattern for a call spread. I'm going to put that in a window. Hey, this PXD, nice exit on this. We were short this the entire way down. We took our last third on this climactic buy setup. Wow, that turned out to be amazing exit. NSC. It's bullish, Sam. Just I looked at your whole list pre-market, Sam. I wasn't crazy about most of them just because they're so extended. Except your Cuervo Gold. I got mine. See how that one's not extended? And it has more of a void. MDB, a low alarm. We have a call spread on this from yesterday. We've got its head chopped on earnings. MDB 435. I think we're probably near our target. Yep. Yeah, it's a midpoint right now is 3 cents. Sam, how many cents do you have? Greg, how's this for guessing? The midpoint's 3 cents, and yesterday I said bid 3 cents to get out. That's
pretty
a
good
good
guessing.
That's a good guess. Nice, Polly. I love it when a plan comes together. You know who said that? What TV show? For bonus 10 points early in the morning. There you go, David. Good job. You know, they make you read all these woke books these days in elementary school. David, I think they should make you watch classic shows like that, like the A-Team and the Jetsons and Gilligan's Island, Hulk Hogan's Heroes. That would be so much more beneficial than these, is Jane a training or not? All right, too early